Today we're going to discuss if it's a good idea for beginners to start with trading options. First, I'll assume you already understand what options are and how they work. But is it actually better to start with options, or should you first trade stocks? The honest answer is it depends on your level of knowledge, goals, and strategy. But here is a key difference. When you trade stocks, in most cases you only need to get one thing right, and that is direction. Will the price go up or will it go down? With options, you need to get three things right: direction, magnitude, and timing. You have to be right about where the price is going, by how much will it move, and about when this move is going to happen. Those extra variables make things harder. To illustrate this, let me walk you through a super simplified example. We'll start with a stock. You buy a stock at $100. If it drops to $98, you lose 2%, and that creates a negative outcome. If it stays at $100, there is no gain and no loss. So we'll call this a neutral outcome. If it rises to, let's say, $101 or $102, you make money and therefore create a positive outcome. So with stocks, you have three possible outcomes: negative, neutral, or positive. Now let's move on to the option example. Now let's say instead of buying this stock, you buy a call option. Strike price is $100 and the premium you pay is $2. Possible outcomes at expiration. If stock goes below 100, your option expires worthless and you lose 100% of your investment, therefore creating a negative outcome. If stock stays at $100, option still expires worthless, and therefore again you lose 100% of your investment and you create a negative outcome. Now let's assume stock moves to $101. Your option and expiration will be worth $1, so you lose 50% of your initial investment. It's not as bad as 100%, but still your outcome is negative. Now if stock moves up to $102, your option is worth $2, and therefore you break even and create a neutral outcome. And last but not least, stock moves above $102, so you finally profit and create positive outcome. So notice the difference. With stock, any upward movement helps you. With the option, you need a big enough move fast enough just to break even. This makes profitable outcomes harder and statistically less frequent for most beginners. You must correctly predict direction, magnitude of the move, and timing all at once. Does that mean you shouldn't trade options? Absolutely not. When used strategically, options can make money when stocks go up, when stocks go down, when stocks go nowhere. But here's the problem. Most beginners trade options for one reason only, and that is leverage. They like that they can control a big position with little money. And yes, leverage can magnify profits, but it also magnifies losses. Leverage is a tool, but beginners misuse it. That's why so many amateur option traders blow up their accounts. They focus on upside and ignore the risk. So what's better, stocks or options? It depends on your experience, your strategy, your risk tolerance. But for most people, learn to trade stocks first. Build consistency, learn risk management, understand psychology. Only after that should you move into options. So next time, let's trade better.